So the idea is what we're going to do is get like lots of little labels, and then we're going to put the short codes there, and then you're going to have them all around there, and then we're going to do stock research of the day, which means throwing the dart at the board, and then whatever stock it lands closest at, I'm going to say, no, that one's terrible, or that's a great stock, and so on and so forth. So
and does the American flag have anything to do with...
No, I don't know where those came from. I think that must have been like my children. These look much better, right? They look a bit like the South African flag.
Absolutely.
Maybe we could have a dual thing where that's for picking global stocks and this is for the local ones.
I think so. And we should also have a board for Greek stocks, actually. Lots of value to be found there, Paul.
No, well, I mean, we'll put the Greek stocks at the top here. So only a really bad throw would get you the Greek stocks, right?
I would probably do that. Okay. So, yeah, look out for that on closing bell. When are we set to start this?
Well, there's a little bit of manufacture that's involved, so it should take, I don't know, 12 hours or so.
Okay, fantastic. I'm glad you're going to be working on it throughout the night. Interesting stories out. Cisco today.
This is breaking my heart.
Yeah, why is it breaking your heart?
Well, you know, Cisco, you'd think would be a business that would be unable to do anything but make an enormous profit at a time like this. It's not that they're doing that badly, but they keep lowering their guidance. So it's an interesting scenario. So you've got a stock which is involved in an industry which is totally booming because they're building like IP networks, the internet, it's, you know, telecommunications companies, it's mobile phone networks, it's banks. So how can they not be doing well? Well, I guess it's because they're guiding lower, and that's not great.
Well, I mean, this is interesting. It's an interesting point that you make. It seems that most analysts had expected them to perform better, and then Cisco comes out and says, well, we're not going to be performing as well as you expect. Are people just not being too optimistic about the future, would you say?
I suppose, but Cisco's a special story. It's a bit like Microsoft and Nokia, two other big tech giants that people have kind of gotten tired of because they don't really seem to be putting the company on a growth spurt. So they've kind of become a little bit bloated. They've got enormous cash balances. They don't seem to be able to do acquisitions which make sense. And Cisco's, you know, kind of risen a couple of times. This is the third or fourth quarterly earnings disappointment in a row. So it's beginning to tire out even the determined bulls. I mean, the question really becomes, do you stick with it and wait for a long-term recovery? Or do you look at another stock sector in the same environment, you know, like Juniper Networks or HP or American Towers or, you know, another company that is performing better in the same
Cisco, Paul?
We do in our US portfolios.
Okay.
I mean, we also own other tech stocks that have been doing very well, like Apple and Google and so on, but certainly Cisco has been a major disappointment.
I'm sure another stock that broke your heart today, Able, African Bank, trading update, expecting headline earnings per share to increase by 20%, and market was expecting 30%. And on the back of this news, down over 4% today. So does that mean you're accumulating today, or does that mean you're worried about the only 20% rise in earnings?
It's a core holding for us, and we've owned it since it was like 7 Rand a share. The African Bank management, as you can imagine, think we're wonderful people because we only ever say good things about the stock. We've been accumulating it forever. We don't go along to the results presentation and make a noise. We just like where they're positioned and we like the way they conduct themselves. But, you know, I mean, this is a stock where if you've owned it for a while, you can see their leads and lags. And this is true of any of these large companies. Sometimes their earnings are better than people hope for, and sometimes they're not. I haven't really seen this. This was just a trading update for the first 6 months of the year because they have a September year end. I don't know.
Do you think people are going to be shifting perhaps from Able to the likes of Capitec? Also, I mean, raising money, talking about opening new branches? Maybe.
You know, I mean, when you talk about competitive sectors that have lots of credible quality companies like banking or retail, there's always someone who's doing well and someone who's not. There's always someone who's the hot rocket of the moment and someone who's the turkey of the sector. And unfortunately, that can rotate and move from one to the other. I don't know, you've got to, in my opinion, pick the one that's in the part of the market that you like and the management team you like.
Joke of the day, Paul.
Yeah.
It wasn't going to you, just on the dart point. You jumped
I was going to get an injury there. The joke of the day was company executives whose names are synonymous with the division that they work in. So the new head of the BHP Billiton Diamond Division, Tim Cutt. Huh? Not bad?
Not bad at all. Well, there we go. I mean, perfect name for perfect position.
Slightly weak. I'll try better.
No, very good, week. Paul. Make me laugh every time. Paul Theron from Vestac, thank you so much for joining us on this edition of Mad Markets.